Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to the September 20th edition of Basis Loaded with Joe Schmit. I am Joe Schmit, and what we do here is break down the latest from the NDPSR report. Let's start this week with butter. This butter number coming in at 270.65 represents a minus 1/2 to the CME 1 week average of 271 even. We traded 33 loads on the CME. Butter was our CME leader last week in terms of volume. 33 loads has translated here to the NDPSR report. NDPSR butter volume, 4.9 million. So well above our expected 3.5 million. All in all, I'd have to call that a win. Here in the low 270s, the manufacturer had to accept a 0.5 cent negative basis, but was able to move almost 1.5 million pounds above our expected 3.5 contracted volume level. Up next is cheese, starting with the blocks. $2.65. So let's call it 2 cents even on the NDPSR for essentially the fourth week in a row. Prices on the NDPSR fairly sticky. This week's NDPSR print represents a plus 3 to the CME 1 week average of 197.45. Plus 3 is a little bit better than our expected basis. However, when you consider that this is the high week at the CME, plus 3 is a victory. Again, our trend of lower volume on the NDPSR continues, albeit by not as great of an amount. Let's call this 11.3 million, well short of our expected 12.5. We traded 15 loads on the CME last week in the blocks. Now that is a significant number compared to recent weeks. The last 6 weeks, if you go back, each week we traded 3 loads, 3 loads, 4 loads, 4 loads, 4 loads, and then 2 loads. So 15 is a substantial increase over that. But it's interesting, with the light volume at the CME, prices have trended higher, and light volume here on the NDPSR, although prices surprisingly sticky at this $2 even level in the block. Moving on to barrels, the story remains the same. 189.59. That represents a plus 4 to the CME 1 week average of 185.37. That is a 2 week average. And again, I have this as the high 2 week average. So at the high end of the barrel range, prior to barrels losing about 25 cents, the manufacturer was able to call a 4-cent premium, which is impressive. We traded 6 loads on the CME last week. Again, 6 loads, a little bit better than we've done in recent weeks. You'll notice the last 6 weeks, again, 2 loads a week ago, 2 loads a week before that, 9, 4, 4, 7. So light volume in both the blocks and barrels on the CME. Prices have been able to move higher in that environment. Once again, similar to blocks, this barrel volume coming in a million short of our expected 13.5, and this is the 3rd week in a row that NDPSR volume has lingered in the mid 12 million level. So volume still coming in about a million per week under what we would expect, but again, the manufacturer sacrificing a little bit of sales volume while maintaining historical to even a little bit above historical basis. All in all, I have to call it a win for the manufacturer at the high end of the cheese trading range. Up next is whey, coming in at 29.67. This is a nice number. 29.67 represents only a plus 0.5 to the CME 1 week average of 29.30. We traded 13 loads on the CME last week in whey. But what is impressive, of course, in whey, we're always looking at that September 2nd NDPSR price, that number of 27.61. So the manufacturer was able to call almost a 2-cent premium to prior week's NDPSR while selling above expected levels of volume. Volume here on the NDPSR coming in almost 4.9 million pounds, call that 400,000 above our expected 4.5 million pound contracted level, big number in whey, up to a new high, approaching that 30-cent level that we briefly obtained at the CME. We'll see what they have in store for us in the weeks to come. And then lastly, in non-fat, 112.07, that represents a +3 to the CME 1 week average of 108.95. 12 loads traded on the CME last week. Good volume here on the NDPSR as well, 18 million pounds. Still below our expected volume level, but 18 million is a good haul in comparison to recent weeks. And +3, I would have to call higher than expected basis. So this is week 3 of 5 for the September pricing cycle. Currently getting a September class 3 expiration of 1835 with a September class 4 expiration of 1880. If you carry current CME equivalents out through the remainder of the 4-week October pricing cycle, currently getting October class 3 at 1680 and an October class 4 of 1932. We'll see what they have in store for us in the weeks to come. Until then, on behalf of Paige and the entire EverAg Insights team, thanks so much. Bye-bye.